Welcome to another Rooster Talk. We're here at the University Club in Crawley on the campus of the University of Western Australia. We're here with OD6 Metals. Brett Hazelden is the MD, and we got a update on proceedings. OD6 is rare earths in the Esperance region. We've had several coffee with Samsos, and there's an announcement today as we speak. So, Brett, tell us all about it.
Yep, so long-awaited metallurgy results we've put out. It's been an industry, all the investors, and a lot of talk around what's the metallurgy going to be. Is this recoverable? There's been people saying yes or people saying no. But the reality is we've had some very good, very high results, anywhere up to 96%. So, and looking into that 50 to 70% that I've sort of mentioned in the past, that's where we were sort of targeting. We've been at the upper end of that in a lot of results. But yeah, we're really, really pleased with it. And results came from work that was done at ANSTO, which is the Australian Nuclear Science and Technology Organisation. So a whole heap of smart guys that have been doing rare earths for the last 20 years over in Sydney. So from that perspective, the results are fantastic. The market responded. Obviously, we've been up 50% on the back of those results, and plenty of good stuff to come, hopefully.
Yeah, I mean, look, we've talked about this. I remember the very first time we spoke on Coffee Samso. The MET results was kind of the first thing that you had to cross over, and fortunately the results are good. I think on your four prospects you're talking about 70-75% on average.
Yep.
On average, the big thing with rare earths is obviously the acid. Whether you need a lot, you need not so much. Can you give us a run through on those details of the announcement?
So each of the prospects are a little bit different. So when we first went out there, we were going back and looking at an old drill line that was done 15 years ago by Salazar. We've obviously picked up the tenements. They were all vacant when we picked them up, and then we've obviously pegged them ourselves. So vacant ground. Looking at their tenements or the original drill holes, we could see great results in terms of both grade and a little bit of metallurgy. So historically they've done some metallurgy work that was looking good as well. And then really what we've done is we've done some infill drilling on that, then done our aero-electromagnetic survey, which always AEM, we'll shorten that down to. But the AEM's then opened our eyes as to what's been there for each of these prospects. So it's really said, here's a whole heap of granites and areas you want to avoid, and then here's all the clay basins that you want to target. So each of those four prospects are very different. Effectively what's happened is the granites are those old domes, they've had the tops cut off them, and then they've weathered into these basinal environments, or a bit like a bathtub to some extent. The scrum prospect right at the top is the sort of the highest one. Then you go through an elevation change on the way down through to centre, flanker, and then down into prop. So we see different reasons around why they're good and bad in those ones, the different sizes, different geologies. So they all have slightly different metallurgies and slightly different outcomes. If we look at sort of where the highest results were coming from prop, which is at the lowest areas, it sits within, it's got some salt lakes around there, and it's also got recoveries in the 70s, 80s, 90%, and also a couple of lower ones. But what we've seen with prop and all the others as well is if they've got a bathtub like that, the middle bit of that bathtub is where we're getting the really good results. And then as you get close to the granites or the edges of the bathtub, that's where your results are dropping off. And the reason behind that is this is a recently weathered granite. So effectively hasn't had 400, 500 million years worth of weathering at it. It hasn't had the ability to break down, get into the rare earth elements and a bit of water moving around. So it just hasn't got those. It's still got monazite effectively, which is not easily recovered by acid. Whereas the rest of the stuff's been able to be leached down, broken down into fine material. And what we're seeing is the bulk of the fine material actually holds the bulk of the rare earths as well. Okay. So there's lots of differences there. Prop, as I say, that looks really good. If we looked on size, potential size, centre's probably the biggest in terms of total tonnes. It's an area 20 odd kilometres in one direction and 5 kilometres on average in another, probably 20 metres thick, so potential billions of tonnes out there. So that looks really good. Recoveries again 50s to the high 70s. So that looks like an attractive big target for us. Again, similar things in the middle of that bathtub, higher up in the elevation on the big tableland. That looks really prospective as a high priority target for us, along with prop. And then scrum and flanker, they're a little bit smaller. They're about 20 square kilometres to 30 square kilometres of area each. Lot narrower channels. So instead of a big bathtub, you've got these little channels that have been running down. So imagine little river systems. That's also concentrated. We've seen some really good results in those channels. And again, the margins was where the results drop off. So going forward, what does it all mean? Target, obviously, the biggest areas we can, the highest recoveries. And really what we're looking is for the highest grades as well.
I mean, before we go back into the 4 prospects, correct me if I'm wrong, one of the series of positive outcomes I read from the announcement is that now you're talking about you get more understanding of the acid strengths. You're talking about the leach times and how that comes out, and also a lot of the impurities sit in that coarse grain clay as opposed to the fine grain, and you're talking about, because most of the rare earths sit in the fine grain, you can actually get rid of the coarse, and that will then naturally increase the purity of your end product. How is that all sort of affected now that you're thinking, shit, our product is better than we thought, or, whatever?
So let's start with the last point first. So as you mentioned, 80 to 90% of our rare earths sit in this fine fraction, which is less than 75 micron in size. So that's great. What it means is we could get rid of all that coarse material above 75 micron. That represents about 30 to 50% of the volume or the mass. So when we can do that through a simple screening process, or a cyclone. So that's really easy to remove, doesn't cost much. And then suddenly you're only treating 30 to 50% less volume. So suddenly you have to use less acid. A lot of your impurities have already been removed. You'll still leach some impurities in. And when we talk impurities, you think aluminium and iron. So the first set of leach results are we've been able to put all the rare earths from a solid into a solution. Along with coming into that solution, there's also been aluminium and iron and a few other things. So what we'll then do is we'll split the solution from that solid once it's leached, put the waste solid back into the pits, and then we'll look at those solutions and look to remove those impurities so that we get a higher grade product effectively. And that's relatively simple, but it does lose a little bit of rare earths as we remove them. So for aluminium and iron, we generally precipitate them out as a solid and keep rare earths in solution, and then continue to obviously get a mixed rare earth product, which is a mixed rare earth carbonate. The next step after that is to take it to an oxide, which is a secondary step, which is generally done in China, but we'll be looking at doing as well. And that's through a solvent extraction process where you separate out each of the individual rare earths, each of the 15 different rare earths separately. So sum it up, if we can remove 30 to 50% of the material, then suddenly we have a lower operating cost. We're using less reagents, less power, less size of tanks and all those type of things. If we go back to your other question around total rare earths and acid times or acid usages and also time frames that we've done this over. So there was some commentary once upon a time, you just do a simple test and it tells you everything. Well, metallurgy is never simple, processes are never simple, you've actually got to do multiple tests. So what we've done is we've put 2 different acid strengths in for 2 different samples, one at a relatively high level just to see what the maximum or the highest point would be, and then we leach it relatively quickly over 3 to 6 hours. And we see how quickly it leaches into solution, and we've generally seen it all leaching out within the first 3 hours. The next step we've done is we've gone from 100 grams per litre of hydrochloric acid, and we've taken that down by a quarter, or by 3/4 I should say, down to 25 grams per litre. So quite a big drop in acid usage. And then we've done it over the same 3 hour and 6 hour period to see what the response is. So positively for us, over 6 hours, it's achieved a similar recovery to the higher acid at 6 hours as well. So what that means is we can put a lower acid amount in and do it over a longer leaching period. How do you do that in reality? It's a bit like gold mining when you go into your carbon in leach tanks. You've got multiple tanks in series and the ore just keeps on flowing downstream. So you would start with one tank, put your acid in there, and it continues to flow downstream. So for us, the next step is, it still looks like we've got the ability to keep those recoveries higher by dropping acid strength again and potentially elongating the leaching timeframes. So we're doing that work with ANSTO going forward and just trying to optimise that process. There'll be a point there that if you put the highest concentration acid in there, you'll get the best recoveries, but it becomes semi-uneconomic, and you're also getting a lot of impurities as well. So we need to trade off recovery with economics effectively. So lower acid consumption, we might sacrifice a little bit of recovery, but then we maximise our revenue and maximise our profits is really what we're looking for.
So from an investor's point of view, because we know investors are very impatient species of people, they're hearing all this and they're going, oh, is this new technology, new methods? Is this going to then, will this going to be hit and miss down the road? Is this going to take a lot longer than my hip pocket wants it to be, etc., etc.? How do you answer that kind of devil's advocate question?
Yeah, so it's always a good question. I get asked a lot. So clays aren't new technology. China's been doing it for a long time. We're obviously bringing that over here. At the moment in Australia, there's only one operational mine, and that's a hard rock mine. So most people aren't familiar with it, so they're scratching their head. The benchmark was recently set by IXR. They put out a ASX announcement end of March saying, here's our definitive feasibility study. They're a clay-hosted rare earth show in Uganda. They own 50% of that project. They put out a DFS which was positive, a couple of $1 billion worth of EBITDA, 400 or 500 million MPV, IRR of 30%, all good ticks in the boxes. So let's compare our project against them as a benchmark. So their metallurgy recoveries were 35%. Obviously ours is up that 70% at the moment. That'll reduce down as we optimise the whole process, but tick in the box, we should be at least their number, if not a little bit higher. Their total rare earths were about 850 ppm. I'm expecting ours, when we go through the whole modelling and we've got the next round of drilling that will come out in the next couple of weeks, I expect ours to be plus 1,000 ppm. Similar magnetic rare earth contents, which is good as well. So in terms of what you'll get in terms of revenue, that looks good. They put out a 5 million tonne per annum stage 1 development, which is, it's all doable. It sits within similar ones in gold around Australia, if you're looking at comparative sizes and throughputs. So Red 5, even if you went to Gruyere, that's 10 million tonnes per annum. So again, we can do, in terms of the sizes we're looking at, we've got probably billions of tonnes of clays out there. We need to narrow it down to those 100 or 1,000 plus ppm, the good recoveries, etc. So if you go through from an investor point of view, okay, I'm now got something to compare against. I can compare you against a study. We're ticking the boxes on virtually all of those, and we're probably bettering most of those numbers. IXR is good, so I'm not putting them down. I'm actually saying they're really, really good, but we're hopefully looking a little bit better on recovery, grade, and even potential throughput.
So I guess that's a benchmark comparison. I guess in such a new game, there's not many things to compare with.
No, they're probably the most advanced. AR3 is another one in Australia. They haven't put out a study yet, but they look similar to IXR as well in terms of recoveries and everything else. So from our point of view, when we talk to investors, we can point to that as a direction that we're heading in. IXR is using a heap leach. We look at both a heap leach versus a tank leach. We won't close our minds off to it. Heap leach, you expect a slightly lower recovery than a leaching process just because you're not mixing it all up. But the cost for a leaching process will be a little bit higher because you're putting a little bit more energy in it, and then you've got to separate your liquid and water at that stage. So look, from an investor point of view, they should be going, well, if IXR is positive, we should be positive, and we own 100% of the project. We're sitting in Australia. There's lots of renewable energy potentially down in Esperance that we can tap into or build our own wind turbines. So from an operating cost point of view, from an ability to get through and make this thing a reality, it looks successful.
Yeah. Another point is that I thought while you're talking that we should sort of bring to light is when you talk about your resource size, you're talking billions of tonnes. So when you talk about a smaller percentage of recovery, not 70, it's actually still a big number at the end of the day. And you talk about how you guys are refining the way you are searching for these. And you have your 4 projects, right? So those are all big projects. Can you step through them? Because are we talking about potentially 4 mines here, 4 holes in the ground kind of thing? Is that what we're talking about at this point in time?
Yep, potentially there could be 4 individual mines if they were on separate tenements and everything else owned by separate people. You could potentially have 4 mines out there. If you look at, say, come back to IXR, the 5 million tonnes per annum over 20 or 30 years, it's not too many tonnes. 100 to 200 million tonnes is what you need. So billions of tonnes is probably, it's a waste of time, or there's multiple mines is probably the high level scenario. Again, if you come back to, if we walk through the prospects, so prop sits about 30, 40 square kilometres. It's probably 20 to 30 metres of thickness in there. We'll narrow it down into the best spots, but there's probably a billion tonnes there by itself. Centre's bigger again. Centre is in the order of 100 square kilometres out there. We only need the best 5% of that. The recoveries look good. Prop's a little bit higher, Centre's a little bit lower. That said, Centre upgrades in terms of removal of that coarse material, upgrades a lot better than prop does. So you can see there's a couple of different differences coming in there. So those 2 could be individual mines by themselves, each doing 5 million tonne per annum potentially. Scrum and Flanker, again, they're a little bit smaller. Flanker's a little bit smaller in terms of still 20 to 30 square kilometres, but a little bit narrower in terms of channels. So that one you'll just have to, still thick in terms of 20 to 30 metres thick, but we'll just have to target that a little bit better. But when you look at the width, so 1 kilometre is still a big wide pit. There's not too many pits in Australia that are 1 kilometre wide, and then obviously the lengths are going to be multiple kilometres. So individually, I think they could each be their own mine. For us, what the results then sort of allow us to do is to focus in on where do we want to spend our money. We could try and get 4 mines up and running, or maybe we start with 2 of the best, which would probably be prop and centre. Focused on those, but still keep on doing work on either side of those as well.
It's interesting you said 20, 30 metres is actually not that deep. It's actually thickness. 6 or... that's what I'm saying. When you go like this, the eyes and the ears say, thinking, oh, it's only like this, but it's actually 6 or 7 floors of a building, right?
That's right.
That's approximately what 20 to 30 metres mean, right?
Yep.
So it is not just 20 to 30 metres, especially when you talk about kilometres and hundreds of square kilometres.
You do the numbers, times the length by the width, by the thickness, and then times by bulk density 1.5, you get those numbers pretty easily.
That's right. It's a big
massive
number.
Yeah.
It's not, when I see that, and I see it talking, I'm thinking, that's not very big, but it's the numbers that you need to register.
Yeah. It comes down to stripping ratio as well, so it's also how close to surface are you? So from a cost perspective, how much does it cost to mine?
Yeah.
It costs about $2 a tonne to mine things nowadays. So you obviously want to do that as efficiently as possible and not have to truck as much waste as you need. So from that point of view, it's another targeting tool for us. I suppose just coming back to the AEM a little bit as well, we were really drilling blind to start with. We didn't really know where we're looking. We can see these areas, it's a bit psychedelic set of colours at the moment, so a whole heap of blues and pinks and all those, but if we concentrate on those areas of orange and red in those AEM maps that we put out.
This is the one at the back, right? In the back of your announcement.
Yeah, that's right.
Figure 1 and 2,
yeah.
The psychedelic photo. I know exactly.
Most people look at it and go, what the hell does this mean? I don't understand. Just think blue is bad, but red is really good.
Yeah.
And then the maps look small in reality, but when you actually look at the scale on them, they're massive.
Yes.
Just imagine 5 kilometres from Perth to, where's 5 kilometres? It's probably, Joondalup's probably 10, isn't it? So
Joondalup's 30 kilometres away from Perth.
Yeah. So, but that's the length.
Yeah.
There's Joondalup, and then Perth to probably the beach, probably City Beach. I'm not sure, but they're massive areas.
Yeah, no, I mean that's what I'm trying to get at. People need to appreciate the size, because we're not the size that you guys are talking about. I mean that whole region is all the players there. You're blessed with being in where you are, because infrastructures and exit points and everything else. And we talked about this previously about potentially an industry that would come of this.
Yep.
Perfect place for it?
Yep. Potentially multi-generational, got green power. There's an existing port, it's one of the biggest ports in the Southern Ocean down there.
Yep.
There's a whole heap of work that we don't need to do.
Yeah, no, I mean, that's kind of things that, and I always tell people when we talked about this is that the key now is that what we're talking about, your met results, how you're going to extract it out, the chemistry, and once all that's been sorted, that place will just boom, just open up.
Yep.
You know, what you're talking about is actually good for every other player that's in the same place anyway.
Yeah. Look, I think there can be multiple mines, not just at our potential project, but Mount Ridley and a couple of the other guys as well when you start talking the Esperance region. And then really what you start saying is, well, can we take the thing one step further? So I think in today's paper, there's an agreement that's going to be signed between Australia and Europe, or the UK, about critical minerals, trying to accelerate these. I think Mark McGowan for the States also put something out today about more money for critical minerals as well, so more exploration incentives and all those. So you can see the government's figured out we need this, and then where is this industry going to develop, but also where is the downstream processing of that? Can it be in Esperance? Can we do it in Perth? You're already seeing it with lithium, with the downstream plants. So why shouldn't we do it in either Esperance, Perth, or somewhere in Australia? Why ship it overseas?
That's why in some ways when you, after, you know, that summary that you just made, you think about where the state of the market is. Yes, it's in a downturn. Yes, the market feels like it's down and depressed. But if you look at what the fundamentals are saying, you should, not saying you should, but everyone should be running in and taking positions now because, you know, the future for the needs is there.
Yeah. I mean, everyone in the market at the moment is scared because of macro themes. So interest rates are going up. There's potential recession around the corner. But look, we've still got high employment rates and everything else. Yeah. People are just reacting to numbers, and the market's a little bit incoherent on those things. But when you look at critical minerals, all these demand coming from electric vehicles, from wind turbines, you need a threefold increase, and this is a federal government number, you need a threefold increase in rare earth supply. That's another 10 mines. Oh. So you can have a lot of them coming from Esperance, why not? Same as lithium, cobalt, magnesium, all these other ones. There's 5-10-fold increases in most of these things just to meet the demand and get to these net zero decarbonisation and electrification of the world.
Correct. And then you throw in the bits where people are getting depleted. So what you had there is actually dropped off. So 5-10-fold is actually probably more because you need to replenish what's being lost.
Yep. And look, Tesla came out the other day. So Elon Musk mentioned that, hey, it's pretty hard to get rare earths. We've got to be looking at different motors. So they're looking at using a ferric ion magnet in the interim until there's enough supply from rare earth magnets. And what's the difference? A rare earth magnet's about 10 times stronger. So instead of getting 300 kilometres of distance on your ferric magnet, you're actually going to get potentially 500 kilometres. It's just more efficient, same as wind turbines. But if the supply is not there to meet it, then obviously these guys need to look elsewhere in the interim term until the supply actually meets that massive demand that's coming.
So, what the news flow that's coming from you guys, the drilling that you mentioned that's already sort of targeting these new areas, you know, yeah, so what's the news flow coming?
Yep, so we've completed some Splinter rock drilling last month. Again, that was targeted based on the AEM, so this time, other than the first round of drilling, we didn't really know where we were drilling. We just drilled it along some existing tracks. Now we're highly targeted, so we've got some good results. We've got the AEM results. We've targeted on those. The MET results have now come in, and those areas that were targeted are in those same MET areas as we're doing. So, look, I'm expecting good results because we've seen good results in there. So again, 1,000 plus trio, 20 to 30 metres thick in a lot of these zones. Some of the zones that we saw last time were up to 60, 70 metres thick. So if we can pull off some fantastic numbers at 40, 50, 60 metres in thickness at 1,000 plus ppm in the assays, if the market doesn't react, then there's something wrong with the market. If the people don't realise that we're not a 2 metre thick intercept and across a massive area, we're actually a 20, 30 metre intercept. This is a mine waiting to happen, then what else do you do, really?
It kind of, you know, the drilling that you're talking about there is almost like a situation history repeating itself because you already know basically what you're dealing with.
Yeah.
So we want to call it infield drilling or whatever drilling. It's almost, not say it's for certain, but you got to be in that ballpark, right?
Yeah.
If it's not, then it's some mystical.
I'd be surprised if virtually 90% of the holes should hit grade, I would have thought.
Yeah.
And some of the holes should really be hitting 750 ppm as a base cut-off grade and above. So, look, I'm expecting really good results. We'll see what the assays have to say. Should come out hopefully in 2 weeks' time once all the assays are received. I think that should hopefully be success. And then if you correlate it again with the AEM data that we've got, then what we're looking to start in May and June is a new drill program that then, instead of going across the width, which is where we've been able to access to date, we're now actually going to traverse the length and down the guts of a lot of these areas. So again, that will confirm dimensions of size. What I'm hoping we'll also see is, we've been able to access 2 areas because they're existing tracks. These are they may be at the best areas, but they may not be. We might find that an area a little bit further north or east or something like that actually has a higher grade, a higher metallurgy recovery, and is the best area to go start. And again, as I say, we only need 5% of these areas. It's not much, so we're looking for the best 5%. That gets your economic returns back quicker.
I guess your style of geology is not a lot of variation, and so the potential you getting what you're saying is almost high. Yeah. You could say without.
In talking with our competent person, he sort of views that it's a little bit like iron ore to some extent.
Yeah.
So big, massive areas. They're big, bit like a channel iron deposit and all those other things. They're just big things around. So, and if we've been able to delineate the boundaries with the AEM, then we can actually drill with the data as well. It makes it really easy to put inferred resources on it. We don't need to be like a gold mine to go into indicated and measured, where you go down to 20 metres or 50 metre drilling spacing. We can probably stay at 100, 200 and 400 metre drill spacings. So cheap, quick, easy drilling. It's purely just a matter of getting heritage surveys and POWs and environmental...
all the boring stuff.
Yeah, all the stuff that just slows us down, all the red tape and green tape. So hopefully the government sits there and goes, hey, we need these critical minerals, there's this massive increase, and we need to start prioritising getting these guys through the system and helping them to get to a producing mine.
Well, okay, fantastic story. I guess it's a good update. It's kind of one of the things that we've been sort of talking that will come, and eventually we're here now.
Look, I think what it does is it gets rid of that, is it going to work type.
Yeah.
We know that we can recover it, so yes, it will work. We can pull the material into solution and then obviously take it out. The question now is all about economics, scale, thickness, size, grade. Is it a 5-year payback? Is it a 3-year payback? Is it 5 million tonnes or is it 10 million tonnes per annum? There's all those things to consider, but there's a good benchmark there that we can all look at, which is IXR. And I hope IXR gets up and running, and I hope we get up and running, Matt Ridley gets up and running, and this industry just takes off, and there's a whole heap of success for everyone.
Well, I think you sum it up very well there. At the end of the day, it's a new industry, it's a new sort of business, you want to put it that way. Rare earth hasn't been around like gold and copper and nickel, etc. And you've hit it on the head. It's now, you've gone past the will it work? Yes, it did work, and it works in that range that you spoke about. So I think it's it's rosy for you guys. I think the market's good for you in terms of fundamentals in the future. Well, Brett, thank you. We must end with you petting the rooster.
Yep.
We won't share the joke that you shared with me. That will be censored. So anyway, thank you, and
we'll touch the rooster. We'll go on his crest there.
Crest, yeah.
He's always good.
All right, mate. Thank you, and we'll wait for the next news.
No, thanks for having us again, and hopefully the market obviously listens to this and gets the detail out of it.
Yep.